Today's lesson is about long-term care insurance, and specifically hybrid long-term care insurance. So what's a hybrid? A hybrid is when you take two things and you put them together. So this is taking a life insurance policy and a long-term care insurance policy and making them into one. Okay, so why do you want to do that? Well, the number one objection that I get from people that are considering long-term care insurance has to do with, look, I'm going to put all this money into the policy and I may never get anything out of it. And then they're going to tell me stories about people that bought it, paid it for 20 years, and then died without ever using it for nursing home care. So this policy prevents that from happening. So in no situation is there on really any of these policies that you're going to get, you or somebody you love is going to get more out of this than you paid into it, whether you're in long-term care or not. So, you know, the example that we have up here is a couple who are age 65, non-smoking. It's in North Carolina, but we do this stuff in all 50 states in the District of Columbia. The policy may be a little different in some states, but we have the ability to serve you in any state. And in this example, we have a 10-year annual premium of $19,285 a year. So, you know, we're covering two people who are age 65. They're only going to pay premiums till they're 75, and they will have paid in a total of $192,000 into the policy during the 10-year period, and there will be no premiums beyond that. And the life insurance benefit on this policy is $225,000, and it's covering two lives, so it's not going to pay off until the second person of the couple dies. So if one of these person in the couple lives to be 90-some years old, then it's going to be a while before this pays off. But, you know, in all cases, this is going to be more than the amount paid in. Okay? Now, if that looks like a lot of money, and it is, it's certainly that way because the insurance company is paying all people. Now, if all you were interested in was the life insurance and you weren't interested in the long-term care aspects of it, we'd be selling you or offering you a different policy if you're only interested in the life insurance. There's better policies out there, less expensive policies for that amount of life insurance that only pays off with the life insurance. But what you're really buying this policy for is long-term care insurance, and you're doing it in a very efficient way. So what this policy is going to do is, for long-term care, is it's going to part and parcel the $225,000 out to you over, it's going to cover two people, husband and wife, and it's going to just part and parcel the death benefit out to you early if you need either home health care or nursing care or really any type of care that's covered under the policy. You're just able to get your death benefit a little early. So if you use up the $225,000 between the two of you, there will be no life insurance benefit. You've just gotten your life insurance benefit as a living long-term care benefit. And the next question will be, what happens when the $225,000 is used up? Both of you are on a lifetime extension rider. So the policy will pay for nursing home care, assisted living care, home health care for your entire lifetime for both of you through the extension rider, and that's all inclusive in the premium. So if you use this thing for long-term care, either one or both of you, it's going to pay out way more than $225,000, significantly more. If you don't use it for long-term care, or you use it for just a little bit, then the death benefit is going to be reduced by the amount that you used it for long-term care. If you didn't use it at all, it's just going to pay out to your beneficiaries. So, you know, all this logic and logical stuff is what a lot of people think causes somebody like you to buy long-term care. And being experienced at this, I'm thinking it doesn't, okay? Is we get lost in the numbers and the statistics and the price and all that kind of thing. People buy long-term care insurance because they love their family. It's just that simple. And people that have long-term care insurance, a crisis that happens probably in your 80s or 90s, maybe in your 70s, if that happens to you, it's really going to make it better for your whole family. And that's what motivates people to buy this. And then the fact that you can't be a situation where you're going to get less out of this thing than you paid in is really just a thing to motivate you to make the investment in this. The real motivator is taking care of your family in the event you can't care for yourself. I'm Hans Scheil, and I thank you for listening.